Zynga shares, they're actually down, I believe, 40%
yes.
in the pre-market?
Yeah, down to close to $3. This was a stock that had its IPO last year at $10.
Down, so 70%
yes.
below. That,
exactly.
Wow. What happened? Why is it down so much today?
Well, they lowered their outlook dramatically. One analyst called it mind-boggling how much they cut their outlook, and they report disappointing results. The problems are manifold. First, they had trouble releasing some new games to the market, and those that they did, like Mafia's War 2, weren't very good. The company even admitted that yesterday. Then they said they also had some issues with mobile, just like Facebook. And they also said that Facebook made some changes to their site that favored other games and newer games and discouraged those who had been using Zynga's games.
Yeah, some stats for people at home. Cityville, Farmville, two of Zynga's popular games. Since October, the number of players of Cityville is down 70% on a daily basis. The number of players of Farmville is down 50%. That's according to app data. So these games are clearly not doing well.
And that's the concerning point. I mean, you know, some of that stuff that I just mentioned is fixable. You can make better games. You can work with Facebook to figure out how to better present your games. But I think what's really concerning to people is the realization, was this whole idea of social media gaming and people wanting to buy for virtual goods for games, was that just a fad? And as you said, those numbers suggest, the drop-off activity suggests that maybe it might have been just more of a fad than something that was a long-term trend.
This is maybe particularly bad for Facebook, isn't it?
Yes. Facebook gets a chunk of its revenue from Zynga.
A big chunk,
A big chunk, about 12% last year.
And 15%, I think, in the first quarter of this year?
Right, right. And
they basically take a chunk of revenues from when you buy, you know, building materials in Farmville and you pay for those virtual goods.
And you're using it on the Facebook platform.
Yeah.
Then Facebook will take up to 30% of that. Plus, Facebook's trying to get some ads into the game. So that's how they make their money via Zynga games.
By the way, we just had Facebook stock on screen there. You could see it reacting to the negative Zynga news. But
it was down about 7% pre-market.
Okay. Now about 6.
Okay. Yeah, yeah. And some people, it was down 7% last night too. People were saying that might be just overdoing it because, you know, one of the problems that Zynga said it had was Facebook is trying to show off other games and other apps on its platform, which in the long term will be good for Facebook to reduce its dependency on Zynga and to highlight other companies and other products. So, you know, what may have been bad for some of what may have been bad for Zynga could be good for Facebook in the long term if they're able to lessen its dependence on Zynga.
What are some of the things we're looking for? Of course, speaking of Facebook's earnings, their first earnings report as a public company is tonight.
Yeah, and you know what? Expectations are all over the board, as you would expect. A new company, not quite sure what to expect. I think people have low expectations, especially after Zynga. So if Facebook has a solid quarter, hits their estimates, which is about 1.1 billion, 1.2 billion in revenue, I think that's going to be seen as a solid quarter for Facebook. In terms of what Zynga means for Facebook, Evercore crunched some numbers overnight, and they figured that maybe Zynga's news and comments and numbers yesterday suggest maybe at $20 million less than they were projecting for Facebook, which is only about 2% of their revenue estimate for Facebook. So, you know, the Zynga impact on this quarter may not be dramatic to warrant that 7% drop that we saw in pre-market trading. Great.
Yeah, one thing that is interesting, of course, here, Zynga is at the level where its stock is trading, the company is worth about $2.2 billion. They have $1.6 billion of cash on their balance sheet.
Right.
So investors are basically saying, this business, it's almost worthless.
And Zynga owns its headquarters too, as Rich Greenfield pointed out in a note overnight. You know, they spent $200 million to buy new headquarters in San Francisco. So that also is part of the assets that they have.
And Mark Pincus and some other executives sold stock early. Morgan Stanley allowed them to sell stock ahead of the lockup period back in April.
Right.
Which is something
at around $11 a share.
Yeah.
And now it's at $3. Good deal for him.
We'll, of course, have more on, especially on Facebook's earnings, on WSJ Live. So stay with us and, of course, on the website. George, thank you very much for joining us this morning.
Thank you.